the dawn of a new era in precious metals. In the glittering world of precious metals, silver has long played second fiddle to gold, often seen as the poor man's gold, a versatile industrial commodity rather than a cornerstone of global power. But as we enter 2026, this narrative is undergoing a profound transformation. China's bold move to impose stringent export controls on silver, effective January 1, 2026, has elevated the white metal from an ordinary commodity to a strategic asset akin to rare earths. This policy shift, mirroring Beijing's playbook with critical minerals, marks a pivotal turning point. Silver is no longer just about jewelry or solar panels. It's becoming a key piece on the geopolitical chessboard. With China controlling 60 to 70% of global silver refining capacity and a significant portion of production, these restrictions, limiting exports to just 44 approved companies for 2026 to 2027, signal resource nationalism on steroids. Prices have already surged over 100 to 150% in 2025, briefly topping $80 per ounce, amid structural deficits exceeding 200 million ounces annually. This article delves into the intricacies of China's strategy, its implications for global supply chains, industries, and geopolitics, and why silver's strategic ascent could redefine power dynamics in the decades ahead. The historical context. Silver's quiet dominance and China's rise. Silver's story is one of understated importance. Unlike gold, which is hoarded in vaults, over half of silver demand comes from industry, electronics, photovoltaics, EVs, and medical applications, where its unparalleled conductivity and reflectivity make it irreplaceable. Global mine production hovers around 800 to 820 million ounces annually, supplemented by recycling. But demand has outstripped supply for 6 consecutive years. China's role has been pivotal yet understated. As the world's second-largest miner, behind Mexico and dominant refiner, China has quietly accumulated reserves while flooding global markets with exports. In the first 11 months of 2025 alone, China exported over 4,600 tons, while importing just 220 tons. This surplus kept prices in check, benefiting Western industries but masking vulnerabilities. Beijing's dual circulation strategy, prioritizing domestic self-sufficiency amid U.S.-China tensions, changed everything. Silver's elevation to strategic material status in late 2025, alongside tungsten and antimony, reflects a broader pattern. Just as China weaponized rare earth exports in the past, silver controls preserve domestic stockpiles for high-tech ambitions, dominating solar, 80% of global panels, EVs, and 5G infrastructure. This isn't sudden. Undisclosed reserves built over years, combined with byproduct production from base metals, gave China leverage. Now, licensing requirements, demanding minimum 80-ton production, and massive credit lines, consolidate power among state-aligned giants, sidelining smaller exporters. The mechanics of China's export controls, a calculated gambit. The new regime isn't a blanket ban, but a sophisticated chokehold. Exporters must be state-authorized, securing licenses per shipment. Only 44 firms qualified for 2026 to 2027, up slightly from prior, but still restrictive. This administrative discretion allows escalation, delays, quotas, or prohibitions based on geopolitics. Motivations are multifaceted. Domestic priority, China's industrial boom. Solar alone consumes 20% of global silver, demands secure supply. Export curbs ensure reserves for national goals. Geopolitical leverage. In a fragmented world, controlling critical flows extracts concessions, echoing rare earth tactics. It pressures dependents like the U.S., now listing silver as critical. Economic warfare. Amid trade wars, restrictions respond to U.S. tariffs and tech bans, signaling resource sovereignty. Elon Musk's alarms highlight stakes. Silver's role in Tesla's batteries and solar tech. Shortages could spike costs, delaying green transitions. Early 2026 effects are seismic. Analysts predict 5,000+ ton deficits if exports halve, pushing prices toward $100 per ounce. Physical premiums soar, inventories plummet in London, Shanghai. Global supply chain disruptions, the ripple effects. China's controls exacerbate a market already in crisis. 2025 demand hit approximately 1.24 billion ounces against 1.01 billion supply, a 230 million ounce gap. Recycling helps but can't bridge structural shortages. Key impacted sectors. Solar energy. Photovoltaics devour silver. Efficiency demands no substitutes. China's dominance amplifies vulnerabilities. Western panel makers face premiums or delays. Electronics and EVs. Conductive pastes, circuits, batteries rely on silver. Shortages hit semiconductors, 5G, autos, defense and medical. Antibacterial properties and circuits make silver vital for militaries and healthcare. Western responses. U.S. promotes domestic mining, stockpiling. Allies diversify to Mexico, Peru, Australia. Recycling ramps up, but timelines lag. New refineries take years. Backwardation in futures signals immediate scarcity. ETFs surge, investors hoard physical. Geopolitical chessboard, silver as the new power play. Framing this as a new chessboard is apt. China moves its queen, silver, to control center squares, green tech, AI, defense. U.S.-China rivalry, restrictions counter tech decoupling. U.S. adds silver to critical list. Potential tariffs worsen squeeze. Resource nationalism spread. Chile nationalizes lithium. Others follow. Fragmented world prizes secure supplies. De-dollarization angle. Silver-gold surges hedge fiat weakness. Central banks diversify reserves. China gains leverage without firing shots. Restricted flows force negotiations, easing tariffs for licenses. But risks boomerang. Higher prices spur alternatives, foreign investment in non-Chinese mines. Long-term, overreach could accelerate diversification. Silver's dual nature, monetary and industrial, amplifies stakes. Not just hedge like gold, but essential for future tech. Economic and investment implications. Opportunities amid chaos. 2025's 150% rally previews 2026 volatility. Projections, $70 to $100 per ounce. Driven by deficits, demand. Investor's eye. Mining stocks, non-Chinese producers, Mexico, Canada, surge 150% in 2025. Physical ETFs, safe amid scarcity. Related sectors, recycling tech, substitutes. Risks, policy reversals, demand slowdowns. But fundamentals, irreplaceable role, persistent deficits, favor bulls. For nations, stockpile, diversify. India hoards, West incentivizes production. Mastering the new chessboard. China's silver strategy heralds a turning point, from abundance to scarcity, commodity to weapon. As Beijing secures its pieces, the world scrambles. Silver's shine now reflects power struggles over tech supremacy and sustainability. This chessboard favors bold players, those adapting to resource realism. Whether investor, policymaker, or industrialist, ignoring silver's ascent risks checkmate. In 2026 and beyond, the white metal may prove mightier than gold in shaping destiny. The game has changed. China's move is masterful. Responses will determine winners.